Chris Richardson, thanks for your time. Let's start with the good news. In the short term, $45 billion better off is the budget between now and 2025, despite spending on COVID and the iron ore price as well really sliding off.
Yeah, lots of bad news out there, but the economy and the budget both likely to do better than Treasury imagined even before Delta. Remember their last official numbers out in May. We see across the current 4-year period, budget deficits $45 billion smaller than Treasury was forecasting.
In that cumulative sense. But the bad news is the structural deficit of the budget. So in an average year, for want of a better word, where's the budget at? You say it's now $60 billion in deficit. That's massive.
It is massive, right? And while we were all watching the daily Gladys and Dan show, two big things stood out. It became increasingly clear that Australia has not been spending enough on social services, aged care, mental health, disability services in particular, and a more dangerous world geopolitically says we also have to spend more on defence. That combination, it's not the temporary stuff around COVID, it's the permanent stuff, social spending, defence spending, a $60 billion hole in the budget.
A lot of those announcements have come already. There's also the 1 million fewer people we have. That's the estimate because of COVID, and this becomes a sort of permanent base, right? If you charted population before, drop everything down 1 million, and so every single year is lower. How big an impact is that?
It's relevant in a couple of ways. Migrants are typically younger and higher skilled, and when we miss them, we're missing tax-friendly people, if you like.
Net positive.
Yeah, net positive, especially for the federal budget. We are an older nation as a result of missing those migrants. The costs are still there, the revenues are hurt a bit, and if some costs, like defence, are fixed dollars. It doesn't matter how many people, it costs however many dollars for a submarine, that weighs even heavier.
So the old plan from the government was essentially that we would grow the economy and eventually we'd hit surpluses and pay off debt. Is that a plausible path now?
No, not yet. Remember, after the global financial crisis, and again, it wasn't the GFC, it was the spending programs we adopted. After that, gave us a budget deficit. We had a structural deficit. It hung around. We had a decade of politicians screaming at each other.
And so this was years the coalition trying to find every little bit they could, and they finally got it essentially back to level. And so that work's going to start all over again.
Right? With a bigger hole and, in many ways, uglier politics to start with.
Something to look forward to, perhaps. Interest rates, just wanted to finish on this one. The Reserve Bank, mostly holding its fire. It's talking about 2023 increases. Huge news for homeowners, for the government debt as well. Do you think that's, again, a plausible path, that they're not going to have any increases until then in interest rates?
Absolutely, right. Do not panic. Yes, inflation higher all over the world, but not ongoing inflation. Essentially, 2/3 of increase in consumer prices on time, over average, is down to wages, unless and until wage growth in Australia doubles from its record low. The Reserve Bank has nothing to sweat about. 2023 sounds eminently sensible to us. It's what we were expecting anyway.
Right, so we don't have an increase in wages. We've got this spike in inflation, and we have a whole lot of households which got a massive amount of money from COVID. They're basically spending it, and then they'll run out and things will return to normal. Is that what the RBA is planning on?
Yes, and I'd also add, China's slowdown will send a bit of a deflationary pulse through the world economy. Count me relatively relaxed and confident. Right. It is still going to plan on interest rates.
You've relaxed, no doubt, countless of homeowners out there, or mortgage holders, I should say. Chris Richardson, thanks for your time.
Thanks.